Hello traders and welcome to another video review. Today is Wednesday, January 14th, 2026. We are looking at the Ethereum. Ethereum is quoted to USDC on Zondacrypto, and we are going to do the technical analysis on the daily time frame chart. So, very nice days ahead of us. It looks like the market wants to move higher. Yesterday, very big candle to the upside, but the bulls are still trying to hit, let me just take the horizontal line, there you go, this high, exactly this high, 3,428. This is the local correction swing high, and this is where the bulls are heading down the good way to test this level, maybe even break above it, right? So let me just place my arrow here. So that's the next target. In a case, if we got the movement to the upside, if in a case there is a breakout, right, what should happen? Well, next target, it's quite obvious. However, this is a little bit bigger zone as far as I can see than the single level, because if we break above this 3,428, then the situation gets tricky, because we are very close to this zone here. And this zone is extremely important for bulls, because this, and for bears obviously, especially for bears, because we got the downswing here, as you can see. We got the bear market. Now the bulls are trying to move higher, so this is very important zone for bears, because any breakout above this this zone would likely means that the market of a bear is done, and we are starting a little bit of a market of a bull. Yes, that's the supply zone that separates bear market from the bull market, of course, in the short term. Nevertheless, in the background, like on a weekly or monthly, Ethereum is in an uptrend, right? So this what you see here is, it looks like a temporary correction on a daily time frame chart, temporary movement to the upside, however being capped below 3,428, but that's the real issue, that's the real obstacle, that's the real zone, supply zone located between 3,618 3,700, right? Moreover, if we apply the Fibonacci retracement tool, right, and if we apply it to the swing low, let's say it is here, and the swing high, and you can see that it is exactly 50% of a Fibonacci retracement as well. Very popular and very important and very strong Fibonacci retracement level. So it's just in the middle of this zone. This is why this zone, this supply zone, is so much important for the bulls. Only breakout above this zone is bullish. Otherwise, even if we break above this swing high indicated by the down arrow, that's not enough. We need to break above it to think about moving any higher. By the end of the month, by the end of the next month, we don't know that, right? It might take 3 days, it might take 3 months. We don't know that, but we know the levels right now. And if we know the levels, all we have to do is to see what is going on, do some scenario, do some analysis for the short term and for the long term, and see if the market reacts and respects the levels we created, and so on and so on. So for now, first level to watch, right? And then this big zone, if we ever get there. If we not, if there is a rejection to the downside, then obviously we go back down towards the 3063, and then we are back into the consolidation range here, the Christmas low liquidity consolidation range, right? And obviously the down movement and this swing would be then continued. That's the major swing in the short term. That's the counter swing movement, where the bulls are trying to break above this level and the supply zone, and this is the in case of a failure, the continuation is always to the downside. in our situation, of course. That's everything from me for today. So thank you very much for watching this analysis, and I would like to say that I hope that we see each other again very, very soon, pretty much soon. So thank you very much for watching this, and take care, guys. Bye bye.